Ladies and gentlemen of the crypto space, we're live on a Monday, June 9th at 11:30 a.m. and it's a heck of a start of a week. Jesus, all the shit over the weekend and the market this morning and all the stuff coming out of executive. Oh my goodness. And was it plasma? And what happened with Circle last week? And I don't know. All I know is when I see the market like this, I'm like, okay, cool. Seems like we were right the whole time. And the market is pricing in all of these things slowly over time, and capital flows from underperformance to outperformance, and capital takes time to rotate to where it is best treated. Now, the complexity is when you're talking about international emerging markets, what the crypto space is, um, you have frictions, and those frictions are barriers that are breaking down as stablecoins do what they're doing. For instance, stablecoins literally facilitate logging into Charles Schwab and being able to buy Aave, Curve, Go, which is a stablecoin that's not necessarily on Coinbase or Kraken or Gemini. But it that is what stablecoins facilitate, because then literally once these the once the brokerages have access to stablecoins, then to access everything, all they have to do is plug into CowSwap or an aggregator, 1inch if they want to go corporate. And that's just like free and public. So that's why everything changes with stablecoins. And access to this international emerging market of emerging markets called the crypto space, the DeFi space, whatever the hell you want to call it, that's when it starts to get weird. But now is the time to be like, all right, everything we did over the last couple of years, we're finally at the point where everyone else sees it. So right now is when folks that know about dieting and whatnot is now is when you get to relax and be like, all right, cool. I'm taking a week off and I'm back on my diet, because once you have a diet and you're doing it for like 3 months, you gotta get some carbs in, and then you go back on your diet because your body starts to plateau. So that's the same thing with capital management. My curse is always seeing the same story in different parts of life, as I just related the practice of dieting and capital management. But it's the same thing. We're at the point where most of our portfolios are probably plateauing, unless you're speculatively trading, experiencing capital gains. But from an investor standpoint, Kerr's been hovering at about 60 to 80 cents, give or take, for quite some time, a month or two, not like the beginning of the year, the first Q1 2025. So as this plateau plays out, this is when you know what's coming next, and you just have to hold tight, so to speak. So Bitcoin closed the week this past Sunday, which is obviously last night, and that is a hell of a candle. That is basically a dragonfly doji. You basically closed at the opening price after a big wick down. That means all the selling last week was basically bought. This is a very rare candle, especially at the bottom. I mean, it's a hammer also, so it's a hammer, but that's a heck of a. It's basically a dragonfly. You're never gonna close at the opening price, like the exact opening price. That's just a silly idea. But that is remarkable. You're basically at the same price. That's crazy. So you opened at 105.6 and you closed at 105.7. That's remarkable. So it was very constructive from a technical perspective, being that we had trouble breaking um, 1061. So there's one, two, three, four failures, four rejections in 2025 from a weekly candle standpoint. And there was weakness because you were pushing back below the 99,832. So this green line, you see, you were pushing through this green line, and then you were also falling below this line. But now, let me show you what I'm seeing. So this is how I do technical analysis. It's not, I don't do necessarily Elliott wave, and I don't do projections forward because I'm not looking for a trade setup. Like what is the odds of success? Like like a 70% chance of success and a 30% chance of I don't do that. But what I look for is the overall structure that tells me how I should feel. Should I be comfortable, confident, excited about a market, or should I be like, all right, this fucker's going to take some time and it's going to go down for a bit? So when I see a chart like this, I see this, and then I see this. Okay, pretty simple. That makes sense. But these two circles tell a very different story. I see a story when I see a chart. What I see here is a break above 99,832 right here in this candle. This, all right, it's hard to draw on the weekly chart. So this candle right here, and I see the breaks above. So we broke above, and then we held above it for 1, 2, 3, 4, 5 months, and we came close to a retest back in May. We came close to a retest in June. But this was, so we had a big wick back in May, and then an even larger wick last week, which was yesterday for the close. And now we're literally pushing back above 106, 116, which is a level that we only wicked through at the beginning of the year, at the end of last year. And now we're literally in it. So, for instance, we are in this area. Whereas back then, we were just barely like, oh, are people going to buy up here? But that's exactly what people are doing now. People are buying up here. There was resistance up there before because as people bought, that's what a wick is. As people bought, people sold into the buying. People sold into the bid. And now, this week thus far, which is this candle, people are buying and they're not selling into the bid. At least there's greater buy pressure than sell pressure. So this is a very different story right now over the past month as compared to the end of last year and the beginning of this year. So that's quite refreshing to see. And Bitcoin will lead because humans are emotional creatures and the sentiment bleeds over and everyone gets affected by everyone's hype and exuberance and all that bullshit that people spew on social media. Oh my God, the prices are crazy. They're going up to the moon. The shit gets viral for those who have been around. So Bitcoin leads, but Bitcoin won't lead for too long as the global liquidity situation turns, or it just continues to turn from an M2 perspective, as Julian and Raul keep talking about. I have those in my X reposts for folks that follow along in the back of class. Because look at Curve, 3.5% of the day. When Bitcoin's up 1.89%, and Curve's up 3.5, and Convex is up 2.4. When things start moving, these repricings are going to be quite extraordinary to see, and everyone will be left behind. So lots of content has been reposted over the last, well, this morning. So if you look through my history, you'll see Julian obviously talking everything code type stuff. Pretty cool. 10 trillion needs to be refinanced this year. We're going to buy it. Who's going to buy it? I mean, in good parts of the 2010s, the Fed bought it. And that's where we're at. We're going to figure out whether the Fed buys it, whether the banks buy it, whether they get someone else to buy it through some sort of regulatory requirement, or what they're going to do with stablecoins because they want stablecoins to be backed by short-term debt, which would allow stablecoins to be a de facto eurodollar or like an actual eurodollar, the way the eurodollar system functioned historically. But now, literally, you could just, if someone has a bit that someone needs dollars and and they're historically went to forex markets, and that would bid the DXY up. Now they could go to Tether, and Tether has a direct line to Treasury, so Tether could just issue Tether, and they could take anything because and preferably they want dollars because Treasury is going to sell the Treasury, the bills and the notes at in for dollars. So, but I don't know. How does liquidity work if Tether has access to liquidity and someone could pay in any denomination? I mean, look at literally the aggregators that we deal with. You could pay in shitcoins for certain. The aggregators accept anything as an input, and you can purchase anything you want in another denomination, and the aggregator sources the liquidity. So technically, and if you need to buy dollars, you could go to Tether for a stablecoin dollar instead of going to forex market, which you may be paying a premium for. I don't know. So maybe there's a discount, and somehow stablecoin issuers work out a relative discount, and they discount forex markets uh, for maybe economic reasons, maybe transitory political reasons, or and how do you do that via politics, vis-a-vis incentive systems? Maybe there's a tax break or some sort of other regime that's set up from a political standpoint such that markets favor stable coins instead of forex markets, and that takes all the bid pressure off of the dollar and forex markets. And we know for a fact that for the administration that has many years left, they want a weaker dollar because that is what fuels domestic production, which we haven't had in this country in 50 years. So if you want domestic production, you need a weaker dollar, and that is other countries coming to purchase things here for export. Anywho, so all these puzzle pieces just make sense, and they all fit together very nicely, very neatly. And it's all laid out. With Circle going live last week with tremendous billions and billions. What was that, like mid cap billions? Was it 50 billion at one point? All right. So what the hell is I mean, where's Circle's products? Product. USDC. Where's the product? The product is operating in these crypto markets. Okay, so what businesses are products? Okay, when the dumb dumb boomer meme coins or the dumb dumb capital and Wall Street figures out that, oh shit, you could do what with USDC? And these become rollover capital investments where the boomers are like, oh, there's a whole market that nobody knows about. And then all of a sudden, capital flows from underperformance to outperformance. And then what happens when shit in crypto goes up 10x on the money? Okay, then it keeps going because it's so under monetized. What's going up goes up more because that's especially how Wall Street is or equity markets are programmed at this point. It's just people buy shit because it's going up. They buy shit for the stupidest reason. It's going up. That's the reason to buy. Any serious investor would say that's the last time you buy. But the vast majority of people in equities markets are not serious investors, so they buy when things are going up. So, what is the thing that's going to go up the most? The crypto markets. Therefore, not only is it going to go up the most, it's also going to go up the mostest because as it goes up the most, that just siphons the capital out of everything else that's going up less. And that's what we saw in 2020 and 2021, except now you come back to the big story of what's different between 2025 and 2026 and compared to 2020 and 2021. And that's when things get interesting because there was nothing in 2020 and 2021. All that was a bunch of degenerate cypherpunks trying to figure out what the hell you could do with these smart contracts. I mean, some brilliant things came out of 2020. Obviously, Curve and Aave came from Lend, and brilliant things came out of 2020. But it was very degenerate time, to say the least. But that's not what it is right now. Y'all remember how many hacks and how much just it was just everything was hacked. Is it going to fail? Is it going to get exploited? That was literally 2020 and 2021. Everything failed. Everything got stolen. You didn't, you didn't get hacked. You doing something wrong or something like that. That was 2020 and 2021. Now it's different. Now it's an actual legitimate investment landscape because shit survived 22. Once things survive financial apocalypse, they become trusted because they prove their resiliency. That's exactly what happened in 22. So where's the capital flow? Capital flow is where risk adjusted, where it's treated the best and where people are not or least afraid. Anywho, at some point, social civility will be financed. What a disaster out in LA. I don't know. I don't want. I'll be somewhere else. I don't understand why. I don't understand the state of things. It's just complicated, complicated, and it's not going to get uncomplicated anytime soon. Good old nut kick. Bitcoin is too risky while they swipe Tinder at 1:43 a.m. under the ceiling fan, caked with dust, and they'll be late, and they'll get their nut kick like, oh damn it, I missed it again. And this is them talking about Bitcoin, yet alone the stuff we just talked about, because you know, where is Circle's product operating? I was thinking about it all weekend. What is the most mispriced asset in the entire crypto space? And I came to a conclusion. My opinion is it's Cleaver. My opinion. And obviously that's Aladdin, referring to Aladdin Dell products. Now, obviously, from a governance standpoint, there's pros and there's things to be said about ALD because that'll control Cleaver. But there's a lot of moving parts in that. And even if you're taking that into account, that's cool and all. That's a big deal. It's 10 mil market cap. And the reason Cleaver comes in at the captain's most mispriced asset in the crypto space is because it's at 800K market cap, which is just weird. That is an 800K market cap that's paying 20% APR, pure CVX. It literally pays you in convex. It's just the most mispriced asset in crypto markets. Now, the complexity there is there's also no liquidity. So I don't know how things will play out there. But what I do know is APR is proportional to the price of convex, proportional to the amount of cash flow in Vodium. So that's cool. So, convex casually rips 10x on the money, where Vodium flows start to get like institutional and shit. And there's another 10x. So then all of a sudden, Cleaver's very illiquid, running around at 800K market cap with what, like 200, 300, 400, 500% APR, 1,000%. So it'll get repriced. So we might see like weird shit because it's so illiquid. How does that play out? In a liquid asset, microscopic market cap, and hundreds of percent APRs would be a weird thing to see because you would think that that would dilute, but you can't buy massive swaths. You can't buy a big clip. You're talking 10% slippage on like 5,000 cleave and like 30 grand, 35 grand. You're paying 10% slippage. This just does. There isn't a lot of supply. If you go over here, I have it up. This is all of it. There's only 35,000 cleave. So, how much does 1% cost? 1% of cleave. You go to vote. Oh, no, go to flows. You go to cleave. So there's 200,000. Let's say there's 200,000. So 1% is 2,000. So to buy 1% of cleave, how much? 15, 6, 15, 6. 1%. 1% of something that controls 24 convex. So cleave is priced at $7. And each cleave controls 24 convex from a governance standpoint, and that 24 convex is what produces its 20% cash flow spread across how it's relatively diluted because there's X amount of cleave. So the cash flow of its VLCVX is spread across the VE cleave. Um, but $7 and 20, well, first off, convex is what, two and change? So two and change, 270, that's 27, that's 54, it's like 60. So just off the bat, like the intrinsic value of Cleve is $60. It controls $60 worth convex. So that's just weird. And then if you talk about like how much curve convex controls, and you're like six, like 110, something like 110 curve per cleave. So it's just weird. So obviously you don't get the cash flow. I described the cash flow component of it, where the VLCVX that Cleve controls is what produces the 20% APR spread across the VE Cleve. But there's another component that's also interesting to think about because things happen over time and we'll see what happens in the future. But there's also the governance, the voting on governance, not gauges. Maybe that gets incentivized in the future. I don't know. But that also plays into what is the significance of curve governance. Maybe it becomes really strategic, like utility and infrastructure, because it's maybe it's underappreciated, even considering what I say about it. Maybe it becomes something more, and that will play into the repricing of these assets, including convex, including cleave, including ALD, including everything. And I sure as hell want to be here to see how these things reprice because they're very, very interesting to say the least. Anywho, so Cleaver goes down as the most mispriced asset I could possibly think of in these crypto markets. RAAC coming in hot with a great post. Um, Great stuff what RAAC is doing and what they talk about, how they understand what's going on with Curve. So they're early from a what they're doing perspective. They do real estate, and that is going to be a very interesting component of crypto markets because traditional real estate doesn't find its way intermingled with equities, but in crypto markets, real estate, because the concept of tokenization, so these comp- these assets get commingled, and they so this could be interesting how these things price on chain because the pricing of things is generally managed by liquidity and it's arbitrage and there's incentives like where's the value of a dollar come from? It's because one USDC is valued at a dollar relative to X amount of tether and so on and so forth. And that's where all these prices come from. Price doesn't just magically happen. That's what this liquidity thing is. That's what folks may not understand why all these liquidity sources, but maybe Curve more so than others, is so important. Where does price come from? The reason one USDC is $1 is because I could pay more or less one tether for it to buy one USDC. And that's the same for a CRV USD. So how do these assets manage the value, the relative liquidity available in all of these pools? Well, incentives play a role, and they could manage the arbitrage themselves, active liquidity management, something we've talked about for many years. But they could also throw around incentives. Oh, guess how you do incentives in crypto markets? Curve. That's how you do it. It's that's why it is what it is. So it's very interesting. And this was a nice post. enough so for me to retweet, and I really don't retweet a lot. Um, what else did I post? I posted about, yeah, Aave. Oh my God. 16 bill is lent out on Aave with like an average interest rate of 5%. The amount the amount of cash flow that Aave generates is extraordinary. So they don't have a fee switch, so they've talked about it. I don't think it's active, but I understand at least enough that I like Aave more and more and more. Aave has its new and improved safety module. So its safety module used to be here. So it used to be Go and Aave. So you could get slashed. If there's bad debt, they could sell the Aave or sell. Well, it looks like there's no max slashing, or maybe it's not displaying it because I don't have any deposited. But I could lose 20% of my staked Aave if there's bad debt. Now that is exactly what they did with the umbrella. And guess what? That's a great name for it. It's an umbrella policy. That's so good. I love I love it when the names make sense. And this pays from protocol cash flow. Where else are they getting the money from? It doesn't just come from nothing. So this is a great product in my opinion. I like this a lot. And I think this is better than even the fee switch. It's like, all right, just don't even bother with the fee switch on Aave. Just keep financing your safety module. I think this is better than a fee switch, at least from an Aave overall business structure standpoint. I was literally paying 11% of stablecoins. Um, it's pretty crazy. Like Circle just got priced at what, 50 bill. Aave's running around 4 bill, and they got 16 bill lending. They're generating countless dollars per year in profit and revenue. And obviously, Circle is generating that kind of revenue as well because they're buying bills and notes to collateral and bank deposits to collateralize their stable coins, but they don't pay shit to their investors. So people invested in Circle and they're like, fuck you, I'm not going to pay you anything. That's what Circle is saying. That when a company does not give money, does not pay you, give you money for buying their stock, they're saying, fuck you, I'm not giving you the company's revenue, I'm keeping it. That is what it means when a company doesn't pay a dividend. And it may be even more insulting when they pay a bullshit dividend because that's like, sit down and shut the fuck up. You got to understand that's really the language that dividend rates translate to. Thank you for your money. I'm not giving you anything in return for it. That is what a 0% dividend rate is. And then a 1% dividend rate is here, sit down and shut up, peasant. All right. Here's a couple, here's some bread and water. Now go away. That's a 1% dividend rate. I mean, now that goes up to like risk free because if you're at a risk free rate of return, which is the average US government debt, let's say 10-year, 4.5%, give or take whatever it is today, then if you're paying more than the risk free rate of return, you're getting a premium, a risk premium. You're getting a premium for investing in something because you could be getting 4.5% taking. Okay. Okay, we're back in action, ladies and gentlemen. We figured it out. Okay, that was StreamYard. That wasn't my internet. My internet was good. Anyway, so risk premium, 10.38%. That's great risk premium. Aave's contracts, especially in V3 and what they've built, how it's isolated now. V2 wasn't isolated, that was more of like a cumulative market. Yeah, I like that risk premium. I like the way it's built. And over time, uh, it's quite a nice number. Aave's just a remarkable product. And their price is 16 bill and their pricing The market cap at 4 billion. All right, great, 10x on the money just to catch up to Circle. And wouldn't a product that is actually lending, it says it's a banking product where Circle is not. It's a different type of product. Still got to figure out how to classify that, but obviously clearly a banking product. If anything, it's one of the top 50 banks by deposit in the United States. So how do you price that? Not a 4 bill. Let's price it at Circle, about let's say 15x on the money from where it's at. Oh, then the whole crypto space really needs to reprice. Bob A should be priced at about 50 bill, give or take. What is Tether priced at? Because they're much larger than USDC and Circle. Good morning, gentlemen. Much a pleasure. Probably mid-curving it, but can Bitcoin hold because of its security budget problem? No, no, I don't. I don't really think about that too much. But yes, I understand the story. Seems to me it will somewhat die someday. Can't wait to see how becomes the store of value. You don't bet on the end because the journey is here. So Bitcoin is the journey right now. Now, obviously, I understand the security budget. I understand the quantum computing conversation. I understand a lot of this stuff. It'll drive you nuts. It's kind of like betting on the end of the dollar. Like we all know the end of the dollar is inevitable, and then you have a milkshake that says the end of the dollar is at 1,000 on the DXY, which I agree with because I understand how the euro dollar system works. And I understand how the vast majority of dollars are created. I understand who have created the vast majority of dollars, and it's not the US. So, because of that type of conversation that we've had a lot of talk about, I don't bet on the end of the dollar and I don't bet on the end of Bitcoin. So, enjoy the journey and don't think too much about the end game right now, in my opinion. The advisor, Yams in the house. Much a pleasure, gentlemen. DA, you have no ability to make curve. By the way, not to say Bitcoin will not pump, but it's the spirit of being right. Well, yeah, I agree. And the security budget's a big issue. Max gains necessarily, ETH as a store of value. I don't want to speculate on ETH as being a store of value or Bitcoin as being a store of value. Ladies and gentlemen, I want to make Friday great again. I don't want to make money great again. I just want to pay my damn bills. Everyone's like, I want to fix the system. I want to fix money. No, I want to pay my bills and go to the beach with some margaritas. Everyone's making this shit way too big, way too complicated. I just want to sit in the sauna for a little bit and get some all you could eat Japanese buffet after. I don't know. Maybe I'm like, I don't know, maybe that's humble or something. I don't want to fix the world. I don't, maybe it's selfish, I guess. Maybe it's smaller. I'm just not thinking big enough. I got to fix them all of money. I got to fix the world. I just don't want to. I just want to relax and pay my bills. That's all. That's why I have my opinions about Bitcoin and Ethereum. And that's why I state what I state about I don't want as much money as possible. I don't care about as much money as possible. And I don't, folks really don't need as much money as they think they need. Because at the end of the day, if you could pay your bills on Friday and you have enough cash to just lease any car you want, like, all right, in 2 years I get another car, pay your bills. That's pretty good. Now, now for a lot of folks, that's maybe disappointing. They don't get to lease their Bugatti or whatever, or have a 20-bedroom mansion in Malibu. But I don't think those are healthy goals. I don't think that's healthy. I don't think anyone needs that. And I think folks do themselves a disservice. People should be more humble. It's a good way to live. I mean, not that I'm the most humble guy, what I have in my driveway. But I don't want anything more. I don't You can be humble while also having a lot of shit, I think. I think that's it's an interesting philosophical conversation, probably. What is humble? I guess maybe everyone has a different level or a different expression of their humbleness. Seek humbleness. Make Friday great again, ladies and gentlemen. Also, with all the political drama, I'm getting increasingly more disgusted by the dollar. Yeah, it's not going to die anytime soon, though. That's another story. What happens after? No, there is no after right now. There's nothing to think about because um, the most dollars, the most dollars in existence were not printed by the United States, and for them to continue, for them to continue exist, there's an interest rate associated with them, and which means another thing, there isn't enough dollars in existence to pay off the debt that exists, that created the dollars that exist. See what I'm saying? It's a catch 22. So to pay off, for the dollar to end and decrease in supply, debt needs to be paid off or defaulted. And if they default, there's going to be wars between countries. And if they pay it off, then you have deflation and austerity. And that is just a catastrophe from a GDP and economic and humanitarian perspective. So you have depressions. Economic depressions is what happens when you have deflation at these current global financialization levels. There's nothing to think about. It's not even remotely conceivable that there's what's next after the dollar anytime soon. Anyhow, that's a one day. It's a very it's hypothetical at this point because everyone said we're going to borrow in dollars, and because of that, they printed dollars. Most dollars were printed outside of the U.S., ladies and gentlemen. The United States printed, uh, however, they printed about 10% of the amount of dollars in existence. That's the amount of dollars the United States has printed. Now, if you talk about M0, it's a fraction of that, but we're talking about like the national debt also. And I guess you could probably have a conversation about USM2, but that's just will drive yourself nuts trying to really understand it. But if we talk from the US national debt, there's about 300 trillion or more in liquidity, how Mike Howard talks about it. So that's a number that I like to use. The whole point is that I'm not in a position to properly say how many dollars exist. I don't think anyone is. But the best expression is that the United States, from a US debt perspective, has printed a fraction of the amount of dollars that exist in global international banking circulation because it's all fractional reserve. That is why the United States simply is not in control of the amount of dollars that exist. That has been done by a choice, intentionally opt in by the entire planet. There is no after the dollar right now. Asun, good morning. Much a pleasure. Fugu, good morning. Sumit, hello. George Gammon dropped a new interview with you. That must have been a good one. You is always fun to listen to. Talking about succession of the Eurodollar system with treasuries, Bitcoin, and stablecoins as a way to bring dollar creation back on shore. That would be interesting. Um, now, bear in mind, Eurodollar is a complicated statement. Uh, like when you use your credit card, if you're in the US, that's printing a dollar. So that's a euro dollar. So the whole point of a euro dollar is just bank credit. It's when it's double entry accounting, when you sell a liability and you have to match your book with an asset, assets and liabilities, double entry accounting. So an IOU for a dollar is equivalent to a dollar. So when you deposit $100 into a bank account, there's not $100 sitting there. The bank owes you $100. You log into Chase and you see $100. There's no $100 there. It just owes you $100. But those $100 that the bank owes you, you can spend them like dollars. So that's the whole point. So that's how the global banking system prints dollars. So the euro dollar just comes back on shore, maybe with treasuries, Bitcoin, stablecoins. But that's the whole point. That's Yu's point. That's an interesting conversation. How things may play out. I don't know, but guess what? All those dollars that were printed offshore, they don't just go away. They're not going anywhere. In fact, they're probably going to be printing a lot more in the coming years. Why? Why are they going to print a lot more in the coming years? Because they owe a lot of interest to create the dollars that they've already created. So they're going to borrow more dollars to pay the interest on the dollars that they have printed offshore. Fugu, excuse me, our sub has a nice APR and a token is mostly flat sideways. Looks interesting. Yeah, yes, it does. I have been looking for some place to allocate capital, and I've just been going back and forth. Haven't really executed. I was looking at Velodrome. Was it the what's it called? The top flight program, the flight test program, which is like 30%, 30 something percent. Tempting. So there's nothing here. These are all aftermarket NFTs. You might as well. Oh, those are tax deeds. Where was it? Did I close those links? Aerodrome. Flight School. Flight School is what it's called. And if you go to Flight School and if you go to the dashboard, you can see that we're at 30%. So, all right, cool. That's interesting. Some big locks. 1.299 million. So that's about what, $650,000 at current price. Someone that's a pretty decent sized lock, 650,000. Got a nice bonus of 292,000 VE Arrow. Okay. You got what's that? Effective VE. So he obviously was diluted because there wasn't that much available. That's large. So hey, look, 378 got a full 39%. Jeez, that's interesting. That's 40%. So right now there's an arbitrage because it pays to do that compared to aftermarket NFTs. Something drives me nuts about it. It's just I wonder how dilution protected you are, dilution protected you are considering flight school and stuff like that. You know, I mean, this thing just pays though. It's just crazy. You go over to vote, it's just a basically 40%. Oh, all right, fine. It's getting diluted a little bit, but you get like this, the big one, WETH USDC, is about 40%. You could easily get 39.9, and you're not going to worry about dilution. That's $200,000 worth of transaction fees for the week. You could probably even get away with Brett at 57. Gee, okay. I'm gonna have to look or reconsider an arrow position because he's a big, much bigger than Velodrome. Huh. Very interesting. I mean, it's just Coinbase pushing all their arbitrage on train. Absolutely wild to see these numbers. And then resupply coming in at 60%. But bear in mind, that's literally what we just saw. We're literally in the 60s, and you got our sub coming in right here. Governance coming in at 70 because it got a little bump. What's it at? Definitely got a little bump if it's coming in at 74%. Well, 228 puts it at 10 mil market cap. Okay. Listen, this resupply is the byproduct of Prisma, and all of that is the byproduct of everything that's gone on in Curve Federation and a whole lot of monetary policy over the years. So there's a whole lot of cyclical dynamics in the incentive systems that have been executed. They learned from everything they did on Prisma, and and plenty of other protocols. A lot of players involved in this. So that's interesting. April was launch, March, that's considerable. Now, obviously, 74% when it comes to claiming, um, what do you get paid in? It's a good question. I don't know. I'm literally asking you guys live. What do you get? What is your claim, your RSUP claim paid in? Here, 74%. Oh, shit. Well, then, that does change the equation a little bit. Okay, so there's a lot of, we're in that point of the market where you may consider what is still potentially at a discount. Clearly, Cleve's at a discount. Clearly, Arrow is nicely priced as well for considerable acquisition. Resupply is on the decline, so there's decent pricing there. Let's see Arrow because that has come down to digestible levels. We're at the top. So some nice levels here. So it's a decent green line. Drew that a while back, and maybe you could draw it a little bit higher, but that's basically at wick bottom in September of 24. So you could chip away at this as an aberration, and look, you got a nice wick there right into it. Here, let's pop it up just a little bit right about there. I like it right about there. So there's a wick right below. Okay, cool. Low volume, 2.48% on the day, 1.84 mil in volume. It's low volume for a 434 mil market cap asset. Okay, look at these. These are all considerable. And don't get me wrong, I don't have, oh, it should have redone because Abracadabra dropped their bid. So curve's coming in at 12.42%. 12.42% reminds me of the umbrella, but then you don't have the upside potential on the principal. Look at these numbers, very interesting numbers. And then you got S bold coming online. You got SRE USD. This market is so different than 2020 and 2021, and this market is so different than 2019. Nothing existed. Folks don't know. Folks don't know. Sumit, Brent Johnson looks at Bitcoin as global liquidity beta. Can the system handle lower liquidity considering the past 2 to 3 year bear market in crypto? There is arguably a bear market in equities markets because you have to consider equities pricing and total currency supply. And equities have gone nowhere since 2020. Basically, a global depression. Folks don't really look, but if you let's look at the S&P rather than Nasdaq. Um, SPY divided by USM2. And it's ugly because that's USM2. You want a bit of a, you want something else. But if you zoom out 6 month, we've got literally parabolic, but we've got nowhere since 2000. We're not even close to the high. Now I remember this was a big breakout. I remember looking at this for a while. You're like, is that going to break? Because this was your 2008 top and everything crashed. You're like, oh, and it broke out. That's crazy that broke out. That was pretty wild that broke in 2023. But this chart has gone nowhere since 2000. It's just barely getting back to where it was. So it's not outperforming. If you do NASDAQ, it looks a little different. NASDAQ is almost at a breakout. So it's keeping up. Look, this is literally keeping up with money supply. And then if you go to Bitcoin, Uh, so Bitcoin, yeah, fine. The Bitcoin is the global liquidity proxy, as Brent talks about, but as Mike Howe talks about, as how Raul talks about, and Julian, and everyone talks about it the same way. There's been a bear market everywhere, and Bitcoin is just moves when the liquidity moves. But the reality is, everything is going to move so much more because the world doesn't revolve around Bitcoin and crypto yet. So everything else needs to be repriced so much higher to get the systemic liquidity to where it needs to be to account for the demographic collapse and tax receipt declines. And that's going to cause so many multiples in the monetization of crypto. It's just going to be disgusting. Can the system handle lower liquidity considering the past 2 to 3 years? No, not this year. They need to refinance 10 trillion total this year. No, system needs much more liquidity if they want to finance debt obligations, if they want to get those tax receipts up, if they want to get that GDP up. I mean, Besson literally said they need to grow their way to pay for the deficit. If the deficit's 6% and change, you need 6% GDP growth to keep up with the deficit. That's a lot of GDP for the US. Yeah, that's like China numbers right there. Whew. Seems like if bonds crack, then we benefit as money rushes out of treasuries into equities. Oh, people like to talk about interest rates. Bonds crack, you'll see it. Worry about volatility. Right now, volatility is at 89. So bonds aren't cracking. If anything, they're solidifying and they're stabilizing. So while um, you can think about bonds cracking, but that's not right now. That's like an event happening after this coming favorable period in crypto markets. At least that's what I see. Because look at the trajectory of the move indicator. We're finally, after years, getting back below 100. I mean, this is years right here. This is a 6 month chart. We haven't been below 100 since 21. And once we start to get below this, if we go over to the weekly chart, once you get below that green line, things start to get weird because those are two bottom ticks at 82. And then you get below the 100 SMA, and down here in the 70s, you're going to start to see a lot of weird shit happen in global liquidity because of the significance of volatility and how it plays into credit creation at the global level, which basically is the precursor to systemic money supply increase. Anywho, so don't worry about bonds cracking right about now, as Jamie Dimon's been talking about. Athletic Concept, hi Cap, much a pleasure as always. Ramses is going to Hyperliquid, looking forward to it. Let's see if they could catch a bid yet again. I keep my locks. I have purchases, not positions. So that is what I've done with my Ramses. I'm quite satisfied. Not with their cash flow. Cash flow is very disappointing, but I'm satisfied with it giving exposure to Sonic. And maybe I'll get more exposure, but at minimum, it's my chosen exposure for Arbitrum, and it is what it is. Maybe something else does better. Maybe Camelot does better. What am I supposed to do? Killis, good morning. Much a pleasure. Amen, Noah. Well said. I just want to pay my bill. Daggone it. Right? Everyone makes it so complicated. I just want to pay my bills. Just want a nice car. I want to go out to the buffet. That's all I want. Fix the credit, fix the world. Yeah, I know. There's a lot of folks that have those nice altruistic thoughts. Although I know, but you actually, I see what you did there. You said fix the credit. So fix the money is what a lot of people talk about from a Bitcoin standpoint. Frankly, it's really fixed credit because if you fix money, you don't have shit. You have no growth without credit. You need credit. But the problem is credit is so disgustingly abused. Like people are using credit to buy food. I mean, we should probably ban things like that. You can't. You need to have enough money to buy food. You can't buy with credit. You buy the bullshit with credit. You buy like a phone. You can't have people putting themselves into debt traps. because you can't choose something over food. You got to choose food first. So food, that's what you purchase. Everything else may is considerably with credit, but the people, I don't know, the whole system is broken. I'll leave it at that. I don't want to be too critical. It's not easy out there. Um, Albeit, when I think from a parent's perspective, I have brought up topics like geographic arbitrage, and I don't really understand why we have these cities that are so populated and so expensive. People, a lot of the folks that have difficulties with expenses versus income tend to be concentrated in cities, just tend to be, and they don't take advantage of the concept of geographic arbitrage, where you can move to rural Tennessee and it's significantly cheaper, especially with like the remote work concept. Let's say you're educated at the city level and and you have software engineering skill set and you could do remote work and you could arbitrage to a relatively inexpensive United States state. I don't know. Anyway, I don't like that topic. It's too complicated and obviously it gets very sensitive at times. Um, RAUSD, it's on the radar. Joel, much a pleasure. When do you hold versus when do you sell? Oh, that's a great question. I don't believe in the words. I don't believe in the words hold. I don't like that word. And I'm a Charlie Munger with regard to the word sell. I don't like the word sell because I'm not good at it. I'm not good at selling things. So I have redefined what it means to be a capital manager. People think of hold or hodl, and I don't like that word. I like the word buy. I like the word own. And my rationale, my logic, my methodology is I want to buy more things. And then I want to buy things that pay me. And if someone tells me to buy something that doesn't pay me, what do I tell them? I tell them, fuck you, pay me. So that is my choice of how I buy things and what I buy. So the part of the equation is when I buy, but that's another story. That's rule number two. So I don't believe in hodling. Hodling's like Bitcoin, but I don't treat Bitcoin as an investment. I treat Bitcoin as cash. It's a collateralizable cash-like instrument. You could say that I hodl Bitcoin, but I don't in my rules, in my methodology. It's just cash. It's sitting there like stablecoins, except I can't put stablecoin. I mean, technically, you can't put stablecoins into Aave and borrow against them, but that seems kind of stupid. But if Bitcoin appreciates into the future and you borrow against it and Bitcoin's appreciating, that's cool. Your health factor on Aave goes down or up rather. And that's what you want. You want to borrow against things that are appreciating into the future. And you can borrow, 3, 5, 10% against your Bitcoin per year. Complicated equation if you want to live off your Bitcoin, but that's another story. Sell for a loss. You're probably implying invalidation of narrative. Listen, invalidation of narrative usually means like over diversification because you want to buy the winners and sell the losers, which means over time you're going to own relatively few things. It's going to be a concentrated portfolio, and that's okay. Um, Listen, sell the losers, buy the winners. You need, and don't rebuy the loser. So now, if you really have heard my stories over the years, what you're saying there is a decent question, even though I don't use the word hold. When do you hold versus when do you sell? When you sell when a narrative is invalidated, when something no longer makes sense. And I don't think, so that's a hard answer. Why? Because I sold Aura. But balance is not invalidated. So you could also sell if your reason for investing is invalidated. Like I invested in Aura because of the convex narrative for Balancer, but I believe that I don't need to be diversified outside of Curve Federation. So that is what I use to invalidate that ownership. And I sold. So these are the hardest decisions you'll make, in my opinion. And that's probably the biggest mistake I have made and most people make. They don't treat these decisions as the hardest decisions they'll make. What to buy. What to buy should be harder than what to sell. You should be very picky. You should be maximally picky. You want to buy the best things in the right quantity so you don't have to sell it because you made a mistake. And you end up optimally rarely selling. The more due diligence you do, the less selling you will do to readjust. I've only sold a few things over the last couple of years. What was it? Aura, Convex. I don't even remember. What else did I sell? That's about it. And it's not like either of them are invalidated. I think Aura is fine, and I think Convex is fine. It just doesn't fit my portfolio for redundancy and excess diversification purposes. And look, I have exposure to endless Convex, especially from Cleaver. Cleaver gives me tremendous exposure to Convex, and obviously Convex gives me tremendous exposure to Curve Federation. So I have exposure on top of exposure on top of redundant exposure. So when it becomes excessive, you get to concentrate and trim, so to speak, stuff like that. Trevor Van Meter, much a pleasure. Hope everything is well today. We could keep it to a reasonable time. It's about an hour right about now. Not bad. Market looks good. Bitcoin clocking in at 108. I think we're going to have a nice week, ladies and gentlemen. So let's leave it at that. Monday, June 9th, 12:33 p.m. 454 people made it to the end of the stream, and you are all now a little bit more rational because of it. I appreciate all of you joining me today, and I will see you guys and gals later this week. Until then, peace.